All right, what's up, everybody? Xavier here. Today, I just want to talk about people that have 401ks or Roth IRAs or any sort of investing account, and they just put everything into the index fund, like let's say the S&P 500 or the Nasdaq, and they just let it sit. Which there's nothing really wrong with that, unless you want to beat the market. So the market average is like 10% year over year. Some say less, even like 8 or 7. And people generally they say start investing at 25 and then wait 4 years, be 65, you retire, you invest $100 a month, $400 a month, or whatever, and it increases as you increase your income, which is fine. You'll be a millionaire regardless. But if you want to beat the market, sort of like me, last year I had a 62% return. Currently I have a 12, almost 13% return, and that's already historically beating the market. And people are like, "Well, how do you do that?" So how I do this is I do a strategy of the wheel strategy, where it is selling options and then selling calls. So, for example, Iron, I sold 51 strike Iron puts like a couple months ago, and I got assigned. And now, my average price, let's see, show it, yeah, $47.50. Irons at 61, and I actually sold covered calls at 50. Right here, as you can see, it's down, um, because I'm missing out on the hypothetical gains. So I'm gonna sell at $51 for 100 shares, and then I have another 61 call strike that I'm gonna be selling if it stays above for the next few days, and my break even price is 64. So I'm pretty happy with those gains. It'll be a few $1,000s, so that's awesome. And that's kind of the essence of the wheel strategy. You sell delta of 25 or 30 or whatever your risk is. So I'll come here just give you an example of like what selling an option looks like. Cash secure put. I do this, usually about 45 days out. Some people say do a yearly. Some people say do a weekly. It really just depends. You can't really go wrong with either way if you know what the company is about and what you're getting yourself into. So this is how it looks. Um, I would probably do this one actually. 50 days out. 12, you see the Greeks. Delta is probability. Theta is how much this option decays every day. So you times that by 100, $7 a day. Vega and Rho, don't really pay attention to all those. I look at open interest, volume, implied volatility. That's very high. That means the option premium is juicy. Like you're paying a lot more for this option premium if somebody buys this put. So if you sell this put, you have to put up a 100 times 50, which is 5 grand. In lieu of, they give you $450. So that's about 5% return, 4.5% return. Pretty good. Worst case scenario, you get assigned the shares at a cheaper price than what it's trading for today. Best case scenario, this option continues to decay, and in a few days, it'll be worth half of what you sold it for, or it'll be worth a quarter. So some people close out at 25%, or some people will close out at half, and you'll make money. So you can do that. That's kind of the wheel strategy. You get assigned, then you sell covered calls, like I'm doing right now. And some people are like, "Oh, well, you're getting cooked. You're getting destroyed right here." I'm not, because it's all hypothetical money, and I'll get my capital back. And kind of the VIX is rising, and I'm totally fine with getting rid of iron at higher levels and getting assigned back in at a lower level. That's probably what I will end up doing. Then the next strategy is leaps, 20% leaps for most people. That is a good idea. I'm selling puts on Oklo 2 right now. 90 strike, which good return today. I'm expecting it to probably keep rising, and I'll probably close out early, or I'll just let it ride because my max return so pretty good. That is almost, it's almost like a third, 3%, 4%, something like that. Anyways, yeah. So selling put there. I get assigned cool. I like Oklo. Understand it. UNH. I bought this sleep. This one. I mean, UNH just literally dived the other day. So I bought this back in October after it dived after earnings, and then it dived after earnings again. So this is probably the worst leap I've ever bought because it wasn't really a leap. It was a short term call option, which most people do. They'll buy call options at like a couple weeks out, a couple days out. That's not what you want to do. A leap is like minimum 1 year out. So I messed up there. They didn't follow my own rules, and that's what I get. And then you can do credit spreads, which I'm not going to cover in this video because I've already covered it in other videos. Like I said, I'm currently hovering this year to date return around 12 to 13%. And whatever works for you, just do that. If you don't want to sell options, don't do it. If you want to just buy and hold, that's fine. If you want to just do the index funds, that's also totally fine to do. So I hope this makes sense to you. If not, you can always book a call with me. I'm actually starting a program. It's going to be over 6 to 12 weeks, depending on what the feedback I get from these individuals is. Minimum, you need about $30,000, so that way you can trade options. If you don't want to trade options, I can still help in that sort of fashion, but that's kind of my expertise. So, um, yeah, the reason I had such a fantastic year last year is because of leaps. A leap is a expiration date greater than 1 year, hence the name long-term equity anticipation security. And the way I do these are on companies that are trading below the intrinsic value, and I have research to have a 30 to 40% upside this year. So I bought leaps on Big Bear AI, for example. Um, and these expire next year. I think they're gonna have a great year. I bought these a couple days ago. Yeah, I bought these last week. I bought leaps on Google because I saw that Nancy Pelosi bought more, so I'm pretty bullish on that. And other politicians are buying it, so that kind of just goes into the realm of doing research, social arbitrage. I also Google Gemini, I believe, is to be way better than ChatGPT. It's really good with research, and I'm having fun using it. So essentially, when you buy a leap, you're controlling 100 shares of that stock, but at the third of the value. So let me go back here. So I paid 73.25. Google at $333 is it's 33,000, $500 or whatever. Or I think it was at 35. So yeah, a lot of money. Um, Not many people have that much money, but a lot more people have around 7,000 that they could buy 100 shares with. So you buy it at a low delta or a high delta of 70 because that means you have a higher probability because it's in the money. Look, the strike price is $300, so it's already in the money. The break even is going to be 373, and you're just allowing it to play out. Okay, the delta is 71. Like I said, every dollar that this moves, that Google moves, this moves about 70 cents, which would be $70. Okay, so essentially, you could buy 3 contracts or 4 contracts, whatever, how much the leap cost, and control 100 shares. But you could buy even 3 or 4 or 5 contracts for the same price as buying 100 shares of that stock, and you're going to control 5 or 600 shares. So that's pretty cool because if you are correct, you're going to have a great return. And if you're wrong, um, obviously the same happens. So you want to do your own due diligence. And once again, if you need help, you can book a call with me, and I would be glad to help you. All right, so selling cash secured puts, we've already kind of covered that. You can take that money that you get, because that 450 I can get immediately, and I can use it for buying whatever I want, typically. So, I wanted to talk about the VIX levels. The VIX is the fear and volatility index. I have this on my watch list because as this rises, fear is rising. As it lowers, greed. So the market is becoming greedy. So back to you know earlier this month. Let's go to like April. See, when the tariffs happened, the whole stock market plummeted. So this went crazy high. It also went high in November, and even this month we had a little spike. Um, so as this rises, options volatility gets increases, options premium increases. So that's a good time to sell options. This is kind of how I allocate my portfolio. I don't have my portfolio 100% invested unless these metrics are being hit. VIX is super high. People are selling everything. Got to get into the market. So as the VIX rises, I'm pretty much putting more into the market, and as it lowers, I'm reducing my share. So right now, I'm sitting on a little bit more cash than I should be sitting on, just because I don't see anything personally that I would like to be investing in at the moment, which is fine. So that's kind of how I use this. You can screenshot that. That's actually from Options Ryan Investing. He talks. He's made that chart, so I just copied that from. I didn't copy the terminology because Tasty Trade goes over this. They have multiple studies just about the VIX levels and how it usually the VIX under 18, which is considered more greed is in the market. The market's going up. Happens for about 42 days on average before it spikes. So they have studies on this, and they are obviously well thought out and researched. So that's pretty much how I handle the VIX. The VIX lowers, we get cautious with how much the capital we have allocated in the market, and as the VIX gets higher, fear is driving the market. So everyone's losing their shit because it's over. That's exactly when we take advantage. So we kind of just to recap, we went over leaps, we went over VIX allocation, we went over selling puts, and we went over how you too can do this with your portfolio, and you can beat the market every year. I see it as if the market averages 8 to 10% a year, and if I double it, that gives me a year back to retirement. So if I return 16 or 20%, then that decreases the year of my goal retirement age. I don't really like the retirement thing because I like working or building stuff, so I don't really see myself ever fully retiring because I think we're all put here to do work in some sort of fashion. Retirement, maybe for me, just I'll always be working pretty much. So, and I'm going to law school, so I'm pursuing that in the fall. Wish me luck. I got the LSAT in a week and a half, and hopefully I can score in the mid to high 160s. I'm practice testing like high 150s, low 160s. So I'm trying to go to Northeastern. So wish me luck on that. And overall, that's pretty much it. Once again, if you want to learn about this or you're struggling or you just want some help, again, this is all free information. Like I'm trying to help people just to get feedback on if it's learnable for them. If they don't understand something, I can explain it to them better. So it's all free. If you want to reach out to me, go ahead. It's like 6 to 8 weeks. I'm probably going to do maybe even 12. I'm not really sure, but it's going to be about an hour a day, not an hour a day, but an hour a week. And we can do it, kind of around your schedule, just not like super late at night. But as always, Jesus is the way, and trade smart out there. Okay. Thanks. Till next time.